Hi, this is Kirk with Forex Strategy Secrets, and we're going to be discussing Forex trading strategies. And so we'll just move right into the charts to get started with and talk about those strategies. Okay, the one thing that we're going to talk about is the long-term and short-term strategies. Long-term, we're going to start out by using the 4-hour as our long-term, larger time frame. When we get to the smaller time frames or short-term strategies, we'll use for a larger time frame, we might use a 30 or the 15 as the larger time frame, finding the direction we're going. So what we'll do is look for some setups on the 4-hour, and that's the direction. Which direction do you want to trade? And then from there, you can go to the smaller time frames and time entries. So we'll use a 4-hour, a 1-hour, and a 30-minute for the larger time frame strategy. So the first thing I wanted to give you a heads up. So the first thing I'm doing is looking for the momentum right here. There's a couple of things that I want to share with you. There are impulsive moves, a blue color and above the zero line, that's an impulsive move. If it's a red color and above the zero line, that's a corrective move. And we can go through and look at some more illustrations. See, this is a corrective move. It's not going to change directions. It's just going to take a rest, a break, maybe a little bit of a retracement, then it's going to take off again. Clearly, now this is on the bottom side. So if it's red and below, that's the impulsive move. This is the corrective move, and then another impulsive move and corrective, and then you get into where it's still trying to adjust. So if we went to even the larger time frame of the day, you would see an overall trend, and this is just a little bit of a noise on this particular situation. This is another illustration of impulsive and corrective. Impulsive, corrective, impulsive, corrective. That doesn't mean that sometimes the corrective moves are not going to move. This one is an impulsive, corrective, impulsive. So you see where every time there's an impulsive, it moves a lot. So that's one thing you're going to use to find the trend. Now I'm going to hit the plus key. So right here, we're looking at the color. Now this is getting ready to go below, and it's an impulsive, and this is a corrective. So we'll look right there. That's the direction of the trend. Now, what if you didn't see everything off to the right? Let's just move it over here to the corner so you don't see all that information. Because all you're seeing is what is showing right here. There's an early bird. This is below. This is red. Now, let's go to the 1-hour chart. What does the 1-hour tell us? The 1-hour says, well, it's still red. It's above. And this is below, so that's still giving kind of a direction. But we know we're wanting to trade in the short direction, and we're looking for an entry in that direction. Okay, right here. Would we enter right here? Maybe not. I'm going to hit the F12 key. That's what I want to see on this one. On the entry time frame, is I want to see it below the zero line. Right there. Now it's below the zero line. So right there, and I'm going to put another vertical line right there. So this is the place that we're going to enter right shortly after that bar open. I don't wait for things to close. That's one thing that people get confused about our strategy, the way we trade. If the larger time frame is going in a direction and the mid or confirming time frame is going in the same direction, the smaller time frame, we don't have to wait till it closes. Sometimes that turns out to be the best, but you don't have to. You might have a little bit of a retracement. Now I'm going to hit the F12 key, and we're going to scroll across and see what that did for us. And of course, we knew that there was going to be a move because we saw that on the 4-hour. But the point is, you could have still traded that because the direction of this 4-hour was going short. Now, we've gone several 30-minute bars. There are 8 30-minute time frames in a 4-hour period of time. So this just only moved. This first one was 8, and the next one was 8. So we still have the 30-minute that is going, and it's starting to Yeah, it's still going. It started retracing right in there. Then a little hesitation. But see, this stayed strong. Even though you took a retracement there, everything else is showing strong going short. This is the first signal we've had that said maybe it's going to take a rest. We don't know whether it's going to stop or take a rest at this point. But how many pips did we get if we'd taken the trade there down to where it is currently? There's about 53 pips in that move. So the long-term strategy is you find the direction of the trend and you trade that direction. Now we notice it goes sideways again. So when it's going in a retracement mode or a corrective mode, yes, you can trade there, but don't expect a lot of pips. I'm going to draw a box around this area right here. And 1, 2, 3, 4, 5. 5 4-hour time frame. 1, 2, 3, 4, 5. So that's the area right there. So now I'm going to put a vertical line right here on the edge. I'm going to move this over here. Now I need to move this anchor over here. Now let's look to see if that's an area you want to trade. Here's the 1 hour. See, it's going sideways. The hot lines are intertwined. It's a braided pattern. This is not giving you a direction. If it's moving far away, a nice smooth pattern, that's possibly a time to enter. Right here, did this give you any signals? This was not below the zero line. This was, so there were mixed signals right in here until this 4 hour. What do we look on the 4 hour? Right there. This is red and this is below and this is red on the 4 hour. We can see that it moved 88 pips. Now, I'm not going to go through every illustration and show you what's going on. I'm showing you a concept. You need to practice it as it's happening and get comfortable with, well, this is what it looks like right there. Okay, now I can go to a smaller time frame, and what I'm looking for is, what is that smaller time frame doing? Could we enter right here? This confirmed. This is just the 1 hour. This is below and below, and it's red. Everything's good there. Now we go to the 30-minute, and everything says it's good there as well. So someplace on this bar, and many people will say, well, I don't want to take it up there, but I will take it as it passes this swing low. And it goes below this bracket that I've marked here, which is looks like a little bit lower than what the points are. It was illustrating the sideways, not the up and down. So right there, if you had said, okay, I'm going to take a trade, it went a little bit in your direction, came back up. Went a little bit direction, came back up. But the overall momentum was short. So total of 67 pips, you could have taken out at least half of that. Because as it starts coming back against you, that's a good time to consider closing the trade. So that's what happened on the 30-minute. In the 4 hour, see right here, it went down, came back up. That's the noise you've been seeing, and then it goes down again. So I'm going to mark that within this other vertical line to where it actually ends. I'm just taking this impulsive move. See it right here, it says it was still going short. Here it says, well, it was going back up. Now let's look and see what these time frames are telling us. See, the 1 hour is not saying it's going short at all. So even though the 4 hour does, you need confirmation of 2 larger time frames. That's the larger strategy. See, that's the key. You say, oh, the 4 hours going. Well, every time I take it, it goes against me. Well, you've got to confirm it with the middle time frame is a better way of doing it. And so I'm going to put a line where this blue happened, that'd be a question, and this blue happened, that's another question. But let's see what this 30-minute tells us. Okay, the 30-minute tells us way back in here, we ought to maybe consider not to trade that direction and just take out this section of the impulsive move. And this box is just taking into account the 30-minute move. Now I want to go back on the 1 hour. See, it's only shows a little bit. The 1 hour still says there's momentum going short, and the 4 hour was like 8 hours long. It was just in that section. So that's the part you want to be trading, is when the 3 time frames line up. Long-term strategy. The 4 hour has to find a direction. The 1 hour has to confirm. The 30-minute has to agree with the 2 above, and you know the direction you're trading. When the 30-minute says that it looks like it's ending, that is a suggestion to get out. Sometimes you can say, well, I'm just going to use the 1 hour to trade on. Yes, you can do that. You'll get a few more pips, but take the pips that are really easy. Don't try and squeeze out every pip and make 100% profit from tops and bottoms. People get concerned or get confused and get frustrated when they try to pick tops and bottoms. Take out a chunk in the middle. If the trade looks like it's moving quite well and might go 50 pips, well, when it starts slowing down at 30 pips, you may want to just say, I'll take the 30 pips. If you're not there watching it, it probably could hit your 50 pip target. But here's the other thing. Tighten up your stop. If you're 30 pips and you're going to be away, I would lock in some profit, whether it's 1 pip, 2 pips, 5 pips, or 10 pips. Lock in those 5 or 10 pips, and if it comes back against you, you've had a winning trade. You weren't there to have to babysit it. You don't have to come back and look at it. But there's a whole different strategy about how to manage the trade. This is finding the trades, is what we're talking about. That's a long-term strategy. So I've described what needs to be done there. Okay, what are we looking for? Now, this is not impulsive. This is still a corrective move because it's below. But there are some things called divergence and convergence and congruence. We call it CDC. Right here, to me, this says, yes, that move is over as far as going short in the sideways. Its possibility of going long are very good. Okay, but let's lose the smaller time frame. Let's take, for example, the 30, 15, and 5 as our smaller time frame indicators. So we're using the 30-minute. First of all, I'm going to mark the 4 hour, just like we did before. This is the long term. Now let's go to the 30-minute. Okay, what does the 30-minute tell us? Long term, it had a color change as well. But the reason I marked the 4 hour is this is where you can use the long term and the short term strategies at the same time. We're finding the direction on the 4 hour, but we're timing the entry on the 30. So the 30 said yes, they both agreed. We didn't even look at the 1 hour, but the 15, is it going to agree with the 30? Yes, it agreed that that's the direction it's going to go, but we have to have the 5-minute has to be above. Well, look what's happening here. It's getting close to being above. So if you'd been aggressive right there, you still would have been okay in this instance. But here's the safer trade right here. It's above, and it took a little retracement and took off. So right in here, you had 14, 15 pip move, corrective move again, impulsive move again. So now I'm going to draw a line. We'll just do it where we'll do it right there where the color changed. You had this down portion, came back up. It's higher than the previous, so the momentum was still good. Now, let's go back to the 15. We're just looking at the whole section right here on the 15. See, there's a little corrective move. See, it just barely went sideways there as far as the color change and the momentum. And now we go to the 30-minute. 30-minute is just getting started. You're just taking this part of the 30-minute. 30-minute still has all of this over here to work on. Well, see, the move didn't go very far. It went 25 pips. It took quite a few hours, maybe 4 hours or 8 hours, excuse me, to get that distance. Change colors. Getting close to going across, and everything's lined up. So that's the other place you may want to consider taking trade. Now, so what I'm going to do is mark this 30-minute and go back to the 4 hour and say, what's the 4 hour doing? The 4 hour says, well, that's the direction. We don't see all this off to the side. We're just looking at this one bar, and the 4 hour says, well, I went above, it's blue. Okay, that's the direction we're taking. Go to the 1 hour. We're not doing the 1 hour. We're going to the 30-minute. It agrees and says that's a good place to start looking, and we go to the 15. And it's above, everything looks good there, so we could take a trade in here, and it went up 20 pips, come back a little bit, went up some more, come back, went up some more, come back, up some more, come back. So we have these impulsive, corrective, impulsive, corrective, impulsive. And what we've been talking about and showing you on the charts is the nth degree trading system. Now with the nth degree trading system, you will be able to become more disciplined, mechanical, consistent, confident, and become a successful trader. So all of these things will happen if you discipline yourself to follow the course material and go through all of it, not just to watch half of it and then think you can start taking off and trading, but watch it all and become familiar with it. We have hundreds of students who say our proven trading system, the nth degree, has changed their lives. They now have a path to follow to become successful. We have taken what we have learned in developing our system over the years and fine-tuned it. Now we are now getting some of the best results ever. Our students are doing very well. There is still more. We have developed over this period of time 8 strategies to go into more depth on the nth degree course. It is called the nth degree plus. So what is nth degree plus? Well, it is 8 strategies, and here are some of the strategies that we've come up with. CDC, convergence, divergence, and congruence. First and second legs. Sweeping the trend. We talked about the impulsive and corrective moves. Well, how do you stay in a trade and go from when it starts until it ends and make a lot of pips and maybe even add additional positions? Using the blue light specials, spotting a camelback, finding and using the candy bar setups. This is the sweet trade. That's what we call it, the candy bar. It is one of the safest, most profitable setups you can find and use. Trade in the zone. We were showing you something about trading the zone, but we didn't talk about what we were showing you at the time. Spot mega trends. This will be on the larger time frames. You can really see something that's taking place and say, well, there's something happening. Maybe I better take a look in the smaller time frames. Salt your trade. That's how to look at your trade from bottom up or top down and create watch lists. Once you understand how to spot the direction you should be trading, then you create watch lists, so when those parameters present themselves, you're ready to go. You know which currency pairs you're looking at and what you're looking for. So what else is there? Well, we had a lot of questions over the years, and so we came up with 21 Trading Lab webinars, and these are the answers to those questions in depth. This material is covered in the course, but we have gone to a depth in these webinars. We have 2 acceleration coaching webinars. This is to teach you and show you how to get up to speed quickly. You don't have to take 6 months to go through our course material. It depends on how much time you have. You can do it comfortably between 2 weeks and 6 weeks. Now, some people have more time, and so they get through more quickly. The suggestion is go through as quickly as you can, and then go back and look at the sections you may want to become more proficient in. We have a Fibonacci course that goes along with the nth degree plus. You will also get 2 months of the Norwood strategy scanner. The scanner brings trades to your attention, and all that you've learned in the nth degree system will be brought to your attention automatically. So if you understand what you're asking the scanner to do, that'll make you more proficient in your trading. If you're to buy all these things individually, you spent $1,497. But because of you coming and attending and watching this webinar, or you see a recording of this webinar, your price is only $697 for all the material we've talked about. That's at 21 Trading Labs, 2 acceleration course webinars, Fibonacci course, 2 months of the Norwood scanner, and first of all, the nth degree course and the nth degree plus course. There's a lot of material here for a reasonable and very low price. So to get your copy of this, just type URL, type it into a browser, make sure it's accurate. It'll pop up and you can order your copy of the course material. Then, after you've watched all the nth degree course material, request your 2 month of the Norwood strategy scanner. You can go back, watch the nth degree plus strategies as you're going through and using the Norwood strategy scanner. So you can get all your questions answered by contacting Jed or Kirk. And the best way to do it is at jed@forexstrategysecrets.com. That's our email, and we both answer that email. And give us a call, but if we're not here, we'll try and get back to you. But be sure and leave your email address so we can find out a way how to get in touch with you. So be sure and type in the URL into a browser, and you'll be able to get your copy of the Nth Degree and Nth Degree Plus course with all the bonuses that go along with it. Thanks for watching, and we'll talk to you another time.